Welcome back, Chris. You've written extensively about lithium stocks. Do you think the lithium stock bubble we experienced earlier in the year has burst, or is it just taking a breather?
Well, I think it's taking a breather. What you usually find with these minor metals or these energy metals is that there's a price spike, and the bubble isn't so much in the price as it is in the number of companies that join the space. And so, you've seen incredible gains in the price of lithium. I do think that lithium right now is unsustainable in terms of its price. I think it will probably fall over the next 18 months. It will, although normalize at a higher level than it has, say, over the last 3 to 5 years.
Which lithium juniors do you think have the best chance of going into production?
Well, right now it's a pretty short list, and what you need to find are those companies that have, aside from the obvious things like the best management, superior assets, and also the potential, or not the potential, but actual binding offtakes. I've discussed publicly Galaxy Resources in the past and Lithium Americas as well, and both of those companies, I think, have righted the ship in the case of Galaxy, and also in the case of Lithium Americas, done a joint venture with SQM, one of the largest lithium producers in the world, and they're building out their technical and their financial expertise. So I think, Lithium Americas is well positioned to survive and thrive over the next, say, 3 or 4 years as the production decision nears.
Cobalt is also used in these green batteries. Do you expect investors will start bidding up cobalt stocks as well?
I do, and they have. Cobalt is a small market, and even smaller when you look at the number of investable companies. It's really controlled by two entities, Glencore and Chinese SOEs, and also Freeport-McMoRan, although they're in the process of selling off their cobalt assets because of some financial difficulties. And so, what you're starting to see now is there's been a realization that there really are no cobalt pure plays out there, and you're starting to see people put projects together to try and capitalize on a lot of the buzz around cobalt right now. But it's going to be a long road to hoe, and I think when you're looking at the companies, you have to ask yourself, can they compete with Glencore, that not only owns the mining business but also the trading business, and also the Chinese, who own the refining business as well. So you're up against some pretty stiff competition in the cobalt space.
What's your outlook for uranium, given that its price has been depressed during the past few years?
Well, I think it'll be muted for the next couple of years. You've got a situation where there's excess supply and muted demand. Muted demand is really rooted in stockpiles coming on the market, and also low natural gas prices, really, I think, curtailing the appetite for nuclear overall. It's a relatively rigid market, whether or not we're talking about spot or contract. So you could see a spike. You could see a uranium price spike as high as, say, 30% over the next 18 months. But of course, when you're dealing with $25 spot uranium, 30% isn't that dynamic. So I think it's going to remain muted for the next couple of years until the excess supply and the overhang in the global markets is soaked up.
What do you think will be the top performing commodities over the next 1 to 2 years?
Well, one that really jumps out right now is nickel. You've got a situation where the current nickel cash cost curve is underwater to the tune of about 50 to 60% of global production. That's unsustainable, and so I think you're going to continue to see strength in the nickel market as production decisions get right-sized and mines get closed.
Which stocks do you like at this time, and why?
Well, I mentioned Lithium Americas and Galaxy, and I've talked about them in the past and why I like them, and I think they're sustainable in the current environment and going forward. Another one, I guess, outside of the mining space that I've paid a lot of attention to recently is Nano One Materials. This isn't your traditional mining play. What they're trying to do is basically build a better battery, build a better lithium-ion battery. And they're trying to, play with the chemistry a little bit of a number of different cathode materials. And they've got the backing of various aspects of the Canadian government from a funding perspective. And they're also doing really interesting things in terms of lowering the overall cost of the battery and also increasing the energy density, which is really the holy grail. So that's one I think to keep an eye on as well.
Thanks for taking the time for today's interview, Chris.
Thank you.